of strategies as well. So, which making them a bit more nimble and active.
So, in terms of the types of instruments, leverage, and short selling, are there legal restrictions on mutual funds doing that?
Yes, there are. And, there are some mutual funds that have now got the ability to do a 120 over 20 structure, for example, where they have the ability to short sell 20% and margin 20%. So some mutual funds have grown in terms of flexibility and have the ability to do follow some of these strategies, whereas hedge funds do not have these restrictions. They are able to short sell 100% if they wanted to. They're able to leverage, although leverage is not as available now as it used to be, but they used to be able to leverage up to 2-3 times or more. So there's a lot more flexibility when it comes to hedge funds.
Okay, and the 220 fee structure. Suppose I was going to invest $1 million in your fund tomorrow, how is the 2% calculated? I mean, if I invested $1 tomorrow, would you charge me 2 cents, and then I can invest the other part of the $1 million the following day and not pay the flat fee on it? Or is it calculated on your assets at the beginning of each month, including appreciation, or what?
Most hedge funds calculate it at the end of the month. And so they will look at your balance at the end of the month, and you will get 2% knocked off in terms of what your overall balance in the portfolio. And then on a month-to-month basis, they will look at the performance. And if your assets are appreciated 20%, for example, then the hedge fund manager is going to take 20% of that, which equates to about 4%.
Okay, great. And then if you were going to start a hedge fund tomorrow, how would you go about raising money, and how much would you want to raise as a minimum?
Well, most hedge funds actually start with managers investing their own money, and it's such a difficult environment, and it really depends on the strategy. I mean, I think a question would be: are you buying resource stocks? Are you trying to get into distressed debt plays? Are you trying to buy asset-backed securities? So, but it is a tough time to raise money at the moment when liquidity is so scarce. I really think that you would, in my opinion, if I were to start one, which I don't plan to, but if I were to try to start a hedge fund, I would need to raise a significant amount of capital on my own through friends and family to get it to a critical mass. I'd hope to get to at least 20 million, which is a decent size just to get started. And then, it's really pounding the pavement. It's picking up the phone, phoning investors, phoning people, getting lists, and building a track record. And once you get a 1-2 year track record, it will be easier to raise assets. The hardest part is raising the assets in the beginning. But once you have a 2-year track record, some decent performance, and 20 to 50 million in assets, it gets a little bit easier to raise. Again, it's a chicken and egg issue.
Yeah. Okay. And what do you guys do? Are you consultants or just education, or what?
No, we provide general education on the hedge fund market. We provide reports. We collect data from hedge funds, so we have all the performance data. We get volatility stats. We get performance stats. And we just provide general education to the market on the industry.
Okay. Please call me after the thing's over today.
Okay.
Thanks.
We will do that, Andrew.
Thank you.
If there are any other questions, please press *1 now.
Yes, it's David here. Could you talk a little bit about regulation or supervisory oversight? I have the impression that there isn't a great deal of that when it comes to hedge funds. However, I do know that, in the wake of the financial disasters that we've seen, there's been a lot of talk, maybe more so outside of Canada than within Canada, about the need to somehow regulate hedge funds more closely. Just wondering if you could provide a little bit of insight on that.
Yes, it's Tony here. In Canada, managers, before you set up a hedge fund, obviously you have to go through a rigorous test and pass qualifications with the provincial regulators, and background checks, and obviously due diligence with regards to competencies, education, etc. And a typical hedge fund manager would have to have at least 5 to 7 years experience, including and on top of that, education requirements. But in comparison to mutual funds, obviously the mutual funds are sold through prospectus documents, And with hedge funds, they're sold through offering memorandums. So prospectus documents are filed, publicly, whereas the offering memorandums, they'll vary from hedge fund company to hedge fund company.
Mm-hmm. And then once they are up and running, are there any bodies or agencies that routinely provide oversight to the hedge funds, or is it more the situation that these are private transactions freely entered into, and that's their business?
There's regulatory filings that they all would have to answer to the provincial regulators. For example, in Ontario, the Ontario Securities Commission. So, there's annual filings, there's audited statements that must be filed. Those are some of the requirements.
So basically, the regulator is checking to see that they're conforming to the offering memorandum. So whatever your strategy that you have in the OM, the OSC is checking to see that you're following everything in the OM. If you have a third-party evaluator, they want to see that you have one. For example, you have to have audited financial statements. But as a recent example, the OSC sent out a questionnaire to all the hedge funds across Ontario and had them fill out a number of questions, including their Madoff exposure, for example. So they are undergoing they are exercising more scrutiny, and they're getting in touch with hedge funds more often now in this period and asking for more information.
Yeah, and there's also focused audits. Like from the questionnaires, they have, on a risk-based approach, I understand, they do focused audits.
Okay, but if I understand correctly, then the results of those audits, or the filing, the annual statements, audited statements, for example, those would not be publicly available information, correct? That would be filed with the securities regulators, but kept confidential with them, presumably. Would that be correct?
That's right, unless they choose to make them public.
Right. Okay. Thank you.
Thank you. Greg, please go ahead with your question.
Yeah, can you hear me? I'm not on mute?
Yeah, you're fine.
Okay, great. Well, just a comment with, just a comment, I guess, in general, that I think it was Andrew that raised. One of the things about the stealth and then hedge fund managers going out looking for money to startups, one of the more strict regulations with the OSC is their ability not to market traditionally. I mean, hedge funds aren't allowed to market themselves through media in traditional forms. So it's interesting that the hedge fund manager themselves would typically be in the financial community already, or already tapped into those existing resources for assets under management. So it's an interesting point, and that's one of the reasons that there's so much lack of knowledge in the general industry about it, is they're not allowed to market themselves.
Greg, that's an excellent point. Thank you for bringing that up.
Yeah, until their offering memorandum actually is complete, they're not allowed by regulators to market. That is correct.
Okay, we will take one more question. This is from Vittorio. Please go ahead.
Hi. I just wanted to clarify one point. You said that in general, a typical manager will have anywhere from 5 to 7 years of experience. By experience, do we mean just general experience within the financial sector, or specifically 5 to 7 years of experience in terms of management of assets within a fund?
Yeah, typically, it's with regards to the latter, with regards to management of assets in a fund, and it's reviewed by the regulator.
So you would never find a fund where an individual is managing it for the first time without any experience in terms of.
What happens is they become an associate portfolio manager. So associate would mean sort of an assistant to a full-fledged portfolio, and then I believe it's a 2 to 3 year time frame where they would be supervised by a full-fledged portfolio manager, and then be reviewed at the end by the provincial regulator to become a proper full-fledged portfolio manager.
Okay, thank you.
Okay, well, I want to thank everyone for dialing in today. I hope you found this session helpful. We're going to dive a little deeper in future. We'll keep you posted through email, and we will dive a little bit deeper into some more specific topics on hedge funds. If you have any questions on memberships, you can always go to our website at www.canadianhedgewatch.com and click on memberships. The contact the phone is Sean Datta, D-A-T-T-A, and his number is 416-848-0277, extension 2234. I'll repeat that one more time. It's 416-848-0277, extension 2234. Hope you found this informative, and I look forward to hearing from you again. Take care, everyone.